Welcome. We thought we'd take a look at a trade this week which is occupying the minds of some analysts, and that is the US dollar. In just a minute, we'll be back with Axel to take a look at some of the fundamentals, and indeed it formed part of his trade of the week as at the beginning of this week. But I wanted to set it all up by taking a look at the direction of the dollar, because we've seen some interesting moves recently. Much of the upside has been as a result of expectations the Fed's going to be very hawkish in its outlook and its implementation of higher interest rates. Markets appear now to be pricing in at least 50 basis points at the next meeting, and the Fed's meeting after that could well see 50 basis points as well. But in the last couple of days, we've seen some traders begin to believe that perhaps maybe the Fed might then be done, certainly for the time being. So 100 basis points in the bag. Where's it go after that? Well, part of the setup on my side is I believe that the dollar potentially has more downside to go, because I think that possibly maybe the Fed may be wanting to row back on its expectations or projection of interest rates, because it wants to see just how much implementation or how much effect it's had on the economic performance. And it also takes time, of course, for any interest rate rise to make itself felt on the economy. Let's turn to Axel now, IG's technical analyst, to take a look at that in terms of some of the technicals on that. Because I know yesterday when I heard your trade of the week, you were taking a long position, but you qualified that with a sort of entry point, which we haven't yet got to. What are your thoughts about where we are, given the context of what I've just said about the dollar, and your thoughts about the technicals?
Well, I mean, Jeremy, with regards to the fundamental view, you may still be right, but in the short term, you might get a small up move in the price of the US dollar. And that was my idea for the trade of the week, because it was just based on purely technical data. And I have a daily chart here where basically what we saw since the beginning of April is a rise in the US dollar, as we've seen. And then we had a downtrend for about 2 weeks. And interestingly enough, we then tried to form a bottom around the 50% retracement of that up move. And also the orange line here, which for me was my entry level, just above 101. And that basically is the 55-day simple moving average. And what we're seeing today is a reversal to the upside and a break through this downtrend channel. So short term, we might see an up move in the US dollar here on the dollar basket.
It's interesting, isn't it? Because last week when we were doing this, we were talking about another security. Your point was, or what timescale are we looking at? Of course, when we do trade of the week, we are talking possibly to day traders. We're looking at opportunities in the next few days or so. In terms of the longer term picture, what are your thoughts technically and sort of levels to watch out for?
Well, from a longer term perspective, Jeremy, if you go back to a weekly chart, what we can see here is a very clearly defined uptrend, which has now been in place for a year in the US dollar. And then we saw this really sharp acceleration to the upside back in late April and early May. So it's quite normal for the market to come back down again just as quickly as it rose here and re-enter its long-term uptrend channel. So this is normal price behavior. And also what you can see here is this yellow line, which is the 23.6 Fibonacci retracement of the entire advance seen since last year. So my point of view is simply that as long as we hold above previous support levels, and I'll mention these on the daily chart in a minute, we could be forming a minor hammer formation here and maybe just go back up again towards the 103 or maybe even 103.50 area in the short term in the dollar index. And these levels I just mentioned on the daily chart, for me, are the previous highs and lows going back to March and also April of this year, and the mid-April low. And these come in between basically 99.80 and 99.48. So for me, as long as we stay above there, it is quite possible that we will resume this previous uptrend in the days and weeks to come.
What do you perceive as the levels to watch out for on the downside? If you get across of a certain level, all bets then off on the upside, and presumably then you take a short position. How much further down do you think it needs to go to persuade you that the arguments that the Fed is going to start to row back on its expectations for higher rates? What sort of levels are you watching out for on the downside to make you put a short position on?
Well, basically, if we were to go below 99.48, then we would have taken out a series of previous highs and lows, and therefore that would tell me that we have also fallen through the psychological 100 mark. and that a longer reversal here is taking shape. So in that case, I would expect a decline to take us all the way back down to the red line here, which is the 200-day simple moving average, around 96.78. But if you were to trade it from a short-term perspective, and the trade for the week, for example, if somebody traded this, my stop loss would simply be the last relative low, which is yesterday's low, just above the 101.08 mark, I believe. So it really depends on the time frame you're trading on, where your stop loss levels are and where your entry signals are.
Just wanted to point out one thing on your Fibonacci retracement. You've got the 78.6% retracement. If you bring up a standard Fibonacci on most trading packages, it defaults to 76.4, which is what I use. I use very simplistic approach to technical analysis, and I don't change my variables, which I know you can. You've clearly done so here. Why?
Simply because 78.6 is the square root of 0.618, and 0.618 is 61.8. And because that's the important number, if you take, for example, 0.618 and to the power of 2, that gives you 38.2% Fibonacci retracement. If you do it to the power of 3, that gives you 23.6 Fibonacci retracement. Yeah. So what most people do, and you're using, is 1 minus 23.6, which gives you 76.4.
Okay, interesting. Deep analysis goes far beyond my my understanding of the whole situation, but it's interesting, Axel. Thanks indeed for joining us. So taking a look now there at some of the possibilities for the dollar and a deeper look at what's happening so far as the Fibonacci retracement tool is concerned. If you want more information, do contact Axel. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.